Next up, after last week's show taping, the long-awaited Phase 1 of the U.S. and China trade deal was signed. Now, this promises some pretty big changes for each country, and that includes the agricultural sector. For our weekly market segment, I was joined by Central Valley Ag's Luke Beckman for a breakdown of the deal and what we can expect from a marketing perspective.
I think that the agreement did a good job of cutting some red tape. There was a lot of language in there, Troy, about streamlining approval processes and eliminating non-tariff trade barriers. Some of those things are positive. I think when you look back at the market over previous years, we've had maybe some biotechnology traits that weren't approved, and it caused some issues in the marketplace. So read that to be a positive in Phase 1. Certainly the dollar amounts being confirmed based on what we saw several months ago was a positive. You know, the market didn't see any details in terms of specific volumes by commodity. And so I think, you know, the market was a shade disappointed by that, and we had a little bit of a buy the rumor, sell the fact type reaction, you know, a week ago when that hit. But I certainly think it sets us up to get back to doing at least some normal business with China as it relates to soybeans. We shouldn't expect that any of that business is going to get done nearby as Brazil is starting to harvest their crop. But when we get to next fall, I think it really opens up the door to get back to some normal harvest type logistics.
And ethanol showed up in this agreement too. Why is that good news?
Well, for obvious reasons. You know, China's been a buyer of U.S. ethanol in some pretty large chunks in some previous years, you know, prior to some of the trade issues. And, you know, it really helps with domestic demand when we think about corn. I think the question remains, are we going to export corn? How much corn may we export to China? But if we can get some ethanol into China, you know, it certainly could increase and stabilize the ethanol industry in the U.S. We could maybe push another couple 100 million bushels into the export, the ethanol demand bucket here for the U.S. So strengthening domestic demand and creating a value-added product and then exporting that as ethanol or DDG certainly would be a positive for corn demand.
Yeah, so Phase 1, what's next? Is there going to be a Phase 2?
Well, that's certainly been the discussion. It sounds like some of those things are going to be pushed back until after the election this next fall. So I think the question is, will we see more details as it relates to Phase 1? I don't know that we're going to see a list of volumes specific to what we can expect to export. I think where it shows its head first is probably in the cash markets. And I think you'll feel that, you know, in the PNW and the U.S. Gulf, you know, and that'll trickle back up the supply chain. So we'll feel it in a lot of different places, but I think you'll see it first in the cash market.
Okay, and let's move on to South America now. So fill us in on the delays that is happening down there and if the U.S. market could see any opportunities as a result of those delays.
It's possible. You know, Brazil had soybean plantings go in a little bit later than what they would have liked. You know, they're just getting started with soybean harvest now. Early reports are the yields are pretty good. What it does is it pushes back their safrinha corn planting. You know, and that's a kind of a dicey situation, or can be. They don't want to get too far back in the calendar because then that crop's going to be pollinating in some adverse conditions and potentially doesn't or won't finish. 70% of Brazil's corn production comes from their second crop. They've had some dry, heat-like conditions for that first corn crop. I don't think the market's too concerned about that because they're well aware that, you know, the second crop corn can make that up rather quickly. So it's a situation we need to watch. As of right now, you know, the production seems to be stable. The USDA hasn't acknowledged any major problems, and they're forecasted to have a really nice soybean crop.
Okay, so with the January crop report now out of the way, next major report is going to be in March when we look at acres. So do you have a thought as to where you think farmers will be in 2020 on that regard?
Well, I think you can expect that corn acres and bean acres on that report are going to be up. We had, you know, a 19 million acre dip between 18 and 19 because of all of the wet weather last year. You know, so at least on paper, the intentions or what we intend to plant is going to go up. You know, so corn acres, prognosticators are going to put that anywhere between 92 and 95 million. You know, and soybean acres probably 83 to 86. You know, so we're going to see corn and bean acres go up. You know, the wheat market's been positive, had a positive run lately. You know, so hopefully, you know, maybe that steals some acres for some spring wheat. But we can expect acres to be up. And at that point, you know, you really put a trend line yield on the number and you're going to be able to extrapolate what production is going to look like for 2020. So from a supply side, the market is going to be drugged down by that a little bit. The what if, of course, is what does demand look like? And we just don't know that with the phase one. The USDA may give us a couple 100 million bushel bump, in corn and something similar in soybeans. Keep in mind, we don't see demand estimates for the 20 crop from the USDA until May. So there's a lot of waiting to do, and seasonally, we would expect some good prices as we get into after that report and beyond.
All right, and finally today, Luke, let's hear your price forecast for corn and soybeans, and if there's any other advice you'd like to share for us as well, go for it.
Sure. Well, I think corn at $4 basis the December, $4 basis the July, those are really good values compared to previous years. And I know everybody wants to be patient, not knowing what phase one could mean for the corn or soybean markets, but I think it's also a good risk management principle to just look at the price and say, hey, I know that my break even is X, and if the market's giving you an opportunity to sell at a profit, whether that's old or new crop, you really should reduce some risk in a percentage of those crops and take it. So $4 D corn, if you haven't sold that yet, sell some. Soybeans, they got up to the 980s on the Nove futures, and they've been reeling a little bit here lately, but $9 cash for next harvest seems to be a popular spot for producers. I think we've got a chance to see that again. You need to get your orders working and let the market go get it.